Crazy times, folks. We've seen lots of market volatility, inflation, and uncertain outlook. And here to share some strategies with us dealing with these challenging markets, certified financial planner, professional Jim Lineweaver. And things are crazy out there right now. And you get all the balls in the air. Some are going to hit the ground, so you got to figure out what to do. But there are some opportunities.
There really are, because especially with inflation, the market's picked up the last couple of days. Because some economists out there are saying we might be close to like peak inflation. I don't think we're there yet, because if you look at really what's going on over in China and everything, and blocking up the ports and everything, so I think there's still more to come. However, a way to kind of get rid of some of those ebbs and flows in your portfolio is, and especially for people in retirement, is to rely on dividend or income-producing things. Because you may not realize it, but if you go back 90 years in the S&P 500, 41% of the return of the S&P 500 is from dividends. So
Wow.
they really make a big difference.
So let's talk about dividends. People probably don't even know what dividends are and what different ones out there. What works?
Yeah, so dividends are when you have an investment that can kick off a quarterly or monthly dividend. You know, they might be used to interest at a bank that pays, which really hasn't picked up yet.
Yeah.
But it will. But also dividend stocks, or there's preferred stocks and other things that will pay you monthly or quarterly
Like
while you
gasoline
hold
and that kind of stuff?
It can be. So yeah, if you look at the oil and gas industry, it was out of favor for so long, and now oil's over $100 a barrel. It's around 104 today. Well, what these companies did is they have a base dividend, but now that oil is so high, what they're doing is they're coming out with a variable dividend. And that means that they will pass through a lot of these additional earnings to the people that own these stocks.
Yeah.
And therefore, you can get a little extra juice in your retirement or get rid of some of the volatility that you may see by these special dividends that they've created.
I heard a lot of people in energy, in oil, they were crying the blues for years because it was so low, so low, so low. Some got out when it was low, and now they wish they stayed in, right?
Right, exactly. And that's why you got to be well diversified and stuff. And you don't have to get the timing right, but you can look at general trends, right? Because there's another big benefit here, and that's what really comes through on the tax side of things. Because not only can you look at the variable dividend to help boost your portfolio, but these are at a capital gain rate. So of the best opportunities that are out there, as opposed to your personal income rate, you want things that can actually be taxed much less than a capital gain, or than a personal income rate, which is a capital gain.
It's hard to figure that out without a professional helping you too. And we talked about oil so low, so low, so low. How about banks? I mean, low, 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 almost zero interest.
Yeah, so what happens though, interest rates are going up, right? The 30 years over 5% today. So that means that gradually over time, the banks are going to be able to make some more money, okay? So the banks have been out of favor. Some have been beaten up 20% because they're worried about the economy, but they're starting to pick up again, and you can get some good yield on them, and they should benefit as interest rates go up. And if you buy preferred stocks, those have been beaten up 15 to 20% as well, because they go inverse to interest rates. But guess what? That's also potentially at a capital gain rate. So, and not, everyone oil and everyone preferred is all the same. So you really got to do your homework when it comes to this stuff.
So you say homework, we're talking about oil, we're talking about gas. But it seems to me like, I don't know that much about it. So I need a strategy, right?
Yes, and you're right, a professional. Make sure, somebody that has a team of research analysts like we do, or somebody else that's out there, but, make sure they have a good depth to the organization, and they have a good analyst team to be able to really peel back the onion. You got to make sure these earnings are sustainable, the dividends are going to be increasing over time, so that it can help you out in your portfolio.
You know what else I think is really important about a professional is a professional can calm you down, can make you stay within the line, so you don't go off the road. Because like we talk about the oil, talk about the banks, people bailed on that stuff so long ago. They had all their money in it, it went down, nothing, got rid of it, and now they're messed up.
Right. Well, emotions get involved in a lot of people's portfolio, and you do need a good sounding board. Just like back in the beginning of March when everybody was trying to bail, we actually got more aggressive because it showed that the market was down over 15 and 20% by the NASDAQ. But instead of running, take some additional cash, and it was a good time to purchase.
So you need a professional. I mean, even if you got this much money versus this much money, a professional is going to help you either keep it or grow it, and that's really important. So if you want to help somebody to help you with your financial strategy, or want to know what strategies may work even in a shifting landscape like this one, just give Jim and his whole team a call, and don't miss the Financial Quarterback. That's leading on to Fox News. That's on Sunday. So somebody will help you out right there. Thank you very much.
Thank you. Always good to see you.
Yep. Natalie?